Welcome back to Instables, everyone. So again, going over my daily plan on exactly how I plan on playing into the SPY. Again, we have been tracking our channel. Again, we are looking for our fifth wave for that possible bounce back, or we are looking to see if we do possibly continue on higher, respect our 20-day moving average, and respect the upper end of our channel, have a retest, and possibly continue on higher. This Thursday, we have initial jobless claims coming in. And again, if you guys do remember, we had 5 jobs reports coming out last week. Again, we had 2 that were decent, and then we had 2 that were above expectation. However, we were leading into initial jobless claims, and as you guys can see, we did have a pullback. So again, looking for a better initial jobless claims coming in this Thursday. And our question from here with our candle structure is, are we on a slight correctionary phase for a continuation on higher, or are we on a rejection with our 20-day moving average and our upper end of our channel here? I'm going to go over exactly what we're looking for here. Now, before I jump into this, if you guys can do me a huge favor, smash that like button if you find this video useful at all. Hit subscribe if you want to see my daily plan on exactly how I plan on playing into the market every single day. We go over candle structure, overall strength levels, and any key indicators that we need to be focused on. And again, if you are a day trader or you are looking for very volatile breakouts that we mention every single day in the Instables, and again, we mention any breakout that is worth looking at throughout the day, go to instables.com in the description below, and you will never miss a breakout alert today again. So jumping into the daily chart with you guys, again, we are leading into initial jobless claims on Thursday. That is the biggest catalyst of the week. We don't have as many major catalysts coming in this week. I would also keep an eye on what Putin's response may be to Ukraine. We may see more escalations there. I definitely would keep that on watch. Now, looking at our channel that we have been tracking, as you guys can see, again, we do have our first wave, we have our second. We did mention that we did have our third and our fourth confirmed. And now looking to see if we do have a fifth wave here, to see if we do look for a possible reversal. Again, typically on your fifth wave, you are looking for at least a bounce and then a possible reversal from there. So again, our fifth wave, we will be looking for a bullish setup from here. And again, we will have that confirmation here on the channel if we do get confirmation on that. And if we are looking for bullish momentum here, again, we have no rush here to chase this major spike. Even if we do have one, we do have a retest that we will need to have to show us that we are within proof of concept, to show us that we are going to have a breakout to the upside. And again, that would be confirmation that we would be looking for. Now, looking at our MACD here, again, this is our overall strength. As you guys can see, we have our EMA lines on the bottom of our MACD. If we were just below the median of our MACD for that possible cross and continuation above the median of our MACD here for that confirmation, then we will be looking for that strong continuation. However, we are on the bottom end of our MACD, so we are looking for proof of concept, again, looking for confirmation either on that fifth wave or again continuing on higher above our channel to get that retest and continue on higher. As you guys can see, we have our 12 just above our 26. We are pointing down, wondering if we will cross lower, possibly consolidate lower, and then continue on higher. We will be looking for that cross or continuation on higher if we do cross here. Again, we are just above our 26 EMA, looking to see if we do continue on. Now, again, our confirmation from our EMA lines here will come from our increase in buy pressure. As you guys can see, we do have buy pressure that came out on that large green candle on Thursday after CPI, bouncing off of our 200 weekly moving average, got that large green candle, and now looking to see if we do get confirmation above that previous buy pressure point is exactly what we're looking for. So again, looking for confirmation on our increases in buy pressure will be very key. Now, currently we are on a white shaded line, looking to see if we do continue on with that decrease in buy pressure and increase with sell pressure. So again, we are staying cautious since we do have a white shaded line coming out at this point. But again, if we do get any signals on increases in buy pressure here, breaking above our previous buy pressure point, then we could have a continuation on higher here, and that could be the bottoming out process that we are looking for. So again, keeping this in mind. Now, as far as if we have room to run to the upside, if we are in a slight correctionary phase for a continuation on higher possibly, then we would be looking for our RSI here. 2 things can confirm here. One is that we do have divergence and that we do continue on higher, and that we do continue on with this strength, and we do start to point up, break above our previous peak that we had, break above the median of our RSI, and then possibly look for that continuation on higher, jumping into overbought territory. Or what we will be looking for is if we do drop down below our prior low that we had for that possible triple divergence. Again, that would be higher lows upon higher lows upon higher lows. That would be that triple divergent move that we're looking for on that bottoming out process. So again, just keeping these 2 scenarios in mind. Now, jumping over to the dollar here, again, the dollar's strength has given us weakness in the market. Our question has been, after this major sell-off, are we due for a continuation on lower, or are we going to possibly continue to respect our 20-day moving average here and possibly continue on higher here? Our question has been exactly that, and that's exactly what we're looking for this week. We're going to see if we continue to respect our 20-day moving average here and possibly continue on higher, or if we are going to get a possible rejection here, since we do have a wick to the upside, rejecting levels possibly on a small rejection for that possible continuation on a lower. Now, as you guys can see, our pressure on the dollar, again, that is our strength against the S&P. As you guys can see, we do have a white shade line coming in on that decrease in sell pressure. However, we did get sell pressure. So our question is, will we get our EMA lines to possibly cross back lower, start to head down to possibly cross down below the median of our MACD? That will be that strong bounce in the market. 100% sure this is exactly what we're looking for. So again, keeping the dollar in mind and looking for a possible bearish setup. Again, we don't have any major candle structure points that show us that we are necessarily on any rejection at this point. However, we got to keep these candle structures on watch, because the moment we have a major bearish setup and our EMA line starts to curl down, then we will be looking for that possible strength in the S&P 500. And again, when our 20 does cross below our 50, we will definitely have more confirmation on strength. Now, looking at the weekly chart on the S&P, as you guys can see, we have a gravestone doji followed by an indecisive doji candle coming in here, again, exactly on our 200 weekly moving average. So our question is going into this week is if we will continue to respect our 200 weekly moving average, if we will get more wicks to the downside, possibly get our fifth wave, get another wick to the downside, and then possibly continue on higher. That very much could happen. Or we do continue on below our 200 weekly moving average, and we have to be extremely cautious on a major sell-off that could come. And again, that next wave below 340 would be looking for that bounce at 324. That is our pre-pandemic levels that we had here. So again, if we do drop down below 340, then in my opinion, we do have a 324 level coming in here on the SPY. And lastly, on the monthly chart, again, we have what's called a kiss of death, very much showing us that rejection when we did bounce back. We did try to retest. We had wicks to the upside. We did not cross above our midpoint here. And now we are getting an inverted hammer getting built out here just below our 50 monthly moving average. So again, if we continue with this rejection, then we can have a major sell-off here and possibly get to that 324 mark. Or since this candle is only halfway done being built out, again, we can have a large wick to the downside, possibly respect our 50-day moving average. This is going to be exactly what we keep on watch this month for that possible rejection to the downside. And again, looking for that possible bottoming out process here is exactly why we're going to keep the monthly candle structure on watch. So again, just to recap here, looking for our fifth wave. If we do continue on lower or if we do continue on higher, there is no panic. We do need a retest. We do need that proof of concept. We need the Feds to listen to this good data that we would have on any major spike or any major continuation. Again, looking for the Feds to listen and very much looking for them to possibly anticipate decreases in rates is extremely key in what we are looking for. So again, keep this Thursday's initial jobless claims on watch, because again, we did have a previous major sell-off after jobs data came out, because again, Powell for the last month has been mentioning that he wants a major increase in unemployment. So again, we need bad jobs data to come out for us to get that spike higher for that possible anticipation of the Feds pivoting. So again, that's exactly what we're looking for going into Thursday and what we are anticipating leading into our fifth wave this week. Now, again, with that said, if you are a day trader or you are looking for very volatile breakouts, go to instables.com in the description below and you will never miss a breakout alert today again. And again, all of you instables that come over every single day and support the channel, I appreciate you guys for supporting the channel every single day. Truly, hope you guys do have a great week ahead. We're going to continue to go at it in the instables room and take what the market gives us. Again, the market pretty slow second half of the day. We're definitely keeping every stock on watch, but again, we're not going to throw out things that are not going to honestly run or have any volume. So again, just staying patient and making sure we take what the market gives is what we're going to continue to stay focused on. And again, if you guys do like this video, it does help the channel grow, and I do appreciate it very much. And again, God bless you all, and I'll see you guys in pre-market.